In today's video, what I wanna do is I wanna show you guys how I made a little bit over $5,000 trading gold with a very, very simple strategy. You could use the same strategy and start absolutely crushing it. Our gold trade went a little bit over 550 pips. I think it went way beyond that, but we took profit around 550 pips. My goal with today's video is to kind of give you guys not only a breakdown of why we took the setup, but an understanding behind why and an understanding of how the market moves. So with that being said, what we're gonna do is I'm gonna go ahead and flip on the charts. I'm gonna show you guys how we made this bread. And not just that, but I'm gonna show you how you can start making $5,000 a day trading. Before we get into the video, right now we are doing a flip challenge. I don't know if you guys know about the flip challenge or not. The flip challenge is we help you trade a small amount of money into a large amount of money, right? It's a challenge, obviously. There's a high amount of risk with it. We disclose that in the rules, but it's free. If you guys are interested in it, you can reach out to us on either Telegram or Instagram or whatever you wanna hit us up in, links in the bio, whatever. So all you have to do is fund up an account, and then you're just gonna follow our rules and how we trade. Right now, the flip group, the challenge, the accounts from $270 to it's like $8,000 right now, something like that. It's insane. With that being said, guys, we're gonna go ahead and jump onto the charts and we're gonna go ahead and break down this specific setup for y'all. So let's go ahead and hop on. I had this up because I was teaching someone why I took the setup the way I took it. But what I'm gonna do is I'm just gonna remove everything and kind of get into it with you guys. Just for the sake of whatever, this was a trade we took here. This is trade Zella. This month hasn't been too hot. I've only made $18,000 net P&L. This month hasn't been too hot, but this was a trade. It closed at $4,300 after commissions and what have you not, blah, 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 but that's that. So what I'm gonna do is I'm gonna go ahead and just start off bear chart. I want you guys to have a full understanding of what I was looking at and why. I'm gonna put the replay tool on, but I'm not putting it on to show you hindsight. I'm putting it on to explain the thought process of what's happening while we're looking at the market. So the first thing you got to do is you got to think and you got to understand how markets move. Now, what I mean by that is just understanding the different ways of price delivering or price action moving and the stuff that it does. So when it comes down to it, first thing was I started trading gold around here. Now, when I was trading gold, this isn't the specific setup that I want to mention, but what I liked about it was we grabbed some liquidity and then we moved higher. The next area of interest was here. When price went up, what it did was it created a range for me. The way I trade is I like the most safest, most probable trades, right? And this is stuff that we teach in the community. This is all stuff that I teach in depth in the community. But in regards to it, what you guys have to understand is there's ranges on the charts. So there's the low that puts in a high. When you think about the market, a lot of people get scared of trading because they're looking at candlesticks and patterns and all this BS, right? We don't do that. We look at the anatomy of a chart. What does the anatomy mean? It means markets go up and they pull back and then they go higher and then they pull back and then they go higher if we're trending in an uptrend, right? So if I'm trying to understand my structural range, all that means is that this is our structure low and that goes into the structure high. Now, what does that mean? It just simply means that you need to know where you're trading at. A lot of people don't know what to trade or they don't know how to trade or they don't know what they're trading because they don't understand the structure. Structure, market structure, understanding highs and lows, strong highs, weak lows, strong lows, whatever it might be, is so important. All you have to understand is that if you're in an uptrend and the market is going up, it's going up in between these 2 points. So there's the low and there's the high. So I put two horizontal lines so you guys can clearly see that. It does not matter what happens in between these two lines. As long as we do not break below this area, we have to assume it is going to continue, right? And, you know, we have upside targets, whatever. You can take high at the continuation break of structure. It doesn't matter. But that is the understanding of the market, right? It should make some type of retracement to then go higher. Cool? Cool. Wonderful. Amazing. Now, let's understand where we're at. Now, we're here, we're trading in this range. Price already pulled back and gave us an entry off of we just say this candle, there's an order block here. This isn't where the trade is specifically important. But for me, when I was looking at it was, I was watching price and I was thinking price was going to go higher. Price failed to go higher here, but what it did was it built up some equal high liquidity. Now you might say, hey, Justin, this isn't equal highs. And I'll tell you that you're wrong, because it is. Equal highs has to mean that there's liquidity above both highs. A lot of y'all are getting taught that equal highs are either exactly equal like this, which is true, or it could look like this. That is not equal highs, right? Equal highs has to be either like this or like this, but the first one always has to be the higher one. So keep that in mind, because if it's not, that means that if this spiked up here, will it grab the liquidity? And that's not a good thing. But when it does this, it's relatively equal. This one's a little higher than the next one. That means that there's money here and there's money there. So you have a good upside target. So remember that. When you see something like this, it's a good upside target. Now, another thing you have to understand is momentum. When it comes down to the momentum on the chart, I'm going to delete all this. When it comes down to the momentum on the chart, the momentum and the strength is showing us a few different things. Let me just delete all this. So the market goes up and then it pulls back, right? Market goes up, even though it didn't break, it pulled back. Now, where did it pull back to? It pulled back into this wick. So now it's time for you to do a little investigating, right? It's time for you to think of this as like going through your chick's phone or your boyfriend's phone. You're investigating, you're looking deeper, you want to find out the truth about something. So you start scaling, you start looking through that shit. Probably gonna get sick to your stomach because you're gonna find some shit you don't want to see, right? But at the end of the day, you're diving in, you're looking, you're searching, trying to find the biggest body to wick ratio candle. And you know, we've talked about that a lot. I'm not going to go into depth about what that means. If you don't know what that means, then it's time for you to go and find out and learn what that means. But all right, we're looking for the biggest candle. Okay, that one's not that bad. That's a good one. Let's see if there's a better one. I think there is a better one. Okay, so we found a higher time frame candle. On top of that higher time frame candle, what we had found was we found a imbalance inside the candle, which was here, right? Now, even though this came down with a lot of speed and aggression, it was a beautiful setup. The last thing I want you to do is, I can see this visually with my eyes because I've been doing it for so long, but you should understand that you always want to get deep discount buys. What does that mean? It means that if I throw my fib from the low to the high, that means the direction of the market is going up, right? So when it comes down to my fib, where is this? Here it is. Means that this is going up. So the next move, it should pull back. It should pull back in this range of the 61, 71, 78.6, 88.6 area, right? And then from there, you should have a D extension to the negative 27. So this is the impulse. This is where the money is made, right? This is how you got to look at the market and understand that all you're doing is you're just doing this. And it's just fractals and X, Y, and Z. So now when it came down to this area, what did we do? We took our entry, put the stop below that low, and then we took the highs. We targeted the highs. Now, let's see what kind of played out and what happened. So market opened Sunday, it's up, it pulls back. This is where we entered. We entered right around here. When it opened Sunday, it came right back to this area. We entered, and this thing, it absolutely flew. It gave us a couple opportunities to get in. One reason I knew it was gonna fly was obviously because of the structure and everything. But then you gotta look at what things are showing you. We quickly moved away from this range. We pulled back, mitigated something, and then we started running again. Once again, we made a new high. It pulled back a little bit. And I kid you not, I drew this this descending trend line on this. There's like a lower time frame. Descending trend line like this. And right when it broke, we started seeing a lot of momentum kick in. And then it took off like a freaking rocket. It just explodes. Oh, I'm sorry. I think it was this trend line. It was like this one, whatever trend line it was. There's like a descending trend line. But once it popped, it popped. And then it just kept going and going and going and going. And these are our favorite kinds of setups. So we got out somewhere right around there. But it came through, and then it finally finished the setup. Took us to where we wanted to go. And I think it's running again. I don't know where it's at right now. But, you know, just like that, just understanding price, understanding how the market moves, understanding cycles, understanding where you're at, got us this amazing setup, great risk to reward setup. A lot of people made a lot of money on this bad boy. And, you know, that's all that matters. Because what happens is when you have a overall good win rate and good risk to reward, you're able to maximize the amount of money you're making even during the losing times, right? But at the end of the day, guys, that was the setup. I hope that you gained some type of understanding and value from that. Once again, guys, make sure you join our Telegrams, join the Discord, join all the free chats. All the links are in the bio. We're doing the flip group right now. We're helping you flip a little bit of money to a lot of money. If you guys want to be a part of that. On top of that, guys, right now, we're absolutely crushing in the community. If you want to join our community, it's not a monthly reoccurring thing. It's a one-time, lifetime access. You guys could be a part of it. Trade with us, Zoom calls, get setups, get ideas, get outlooks. And not just that, but, you know, really grasp these concepts in a more in-depth way. And you can take that and you can run with it and, you know, start seeing the same type of results as everybody else. With that being said, guys, we appreciate y'all. Love y'all. Make sure you subscribe, leave a like, leave a comment. If this made sense to you, if you're fucking with it, if you're not, whatever, just give us some feedback. Yo, God bless y'all. Take it easy.